let's walk through how we got here. We started the week with crypto prices plummeting, Bitcoin falling as much as 17% at one point in the day. It seemed like the crypto winter was definitely here.
Most importantly, I asked every CEO offline, do you have any Bitcoin? The word that kept coming back, con. It's a con. I said, well, how about NFTs? They said, well, it's just, can't conceivably even be asking about NFTs if I'm telling you that crypto's a con. I didn't mean a solo had any crypto.
Now, in the chaos, a major crypto lending firm, Celsius, halted withdrawals and cited extreme market conditions as the reason why. Celsius, which managed more than $10 billion in May, was known for offering high returns for customers. We're talking upwards of 18%. Now, those crazy high yields were what eventually came under scrutiny.
I don't want to make a joke of it because a lot of the younger people and a lot of people borrowed money. They will be gone today if they're not careful. This is just shocking to people because, frankly, we don't know how many exchanges there are. I know when Gary Gensler made money, I was telling him I was getting 8% with my Ethereum. And he said, well, that's basically too good to be true, Jim. And I think what he was really saying is you're about to lose a lot of money.
So this risk certainly seems like it's just kind of beginning. What I would say is on the decentralized side, so a lot of the DeFi protocols, a lot of those positions are over-collateralized, so you shouldn't quite see the underfunding situations that can happen with centralized borrower lenders. But that being said, you could still see a lot of liquidations with that collateral being sold off on DeFi protocols.
Then on Tuesday, crypto markets seemed to stabilize, with Bitcoin hovering at around $22,000 and Ether at around $1,100. Investors were assessing the fallout of Celsius, and meanwhile, another company made waves. Coinbase announced that it was laying off nearly a fifth of its workforce due to crypto volatility. The company had previously cut spending and even rescinded job offers in the hopes of stabilizing its business.
We had the recent inflation report that came out that I think surprised many folks. We've had Jamie Dimon and others talk about an upcoming economic hurricane. And so given what's happening in the economy, it feels like the most prudent thing to do right now.
On Wednesday morning, Microstrategy CEO Michael Saylor came on CNBC's airwaves to discuss concerns around his own company. Microstrategy took out a $200 million loan backed by Bitcoin in March. Now, as prices for Bitcoin tanked, investors worried that the company would be asked to put up more collateral for its loan, but Saylor said the fears were overblown.
The margin call thing is much ado about nothing. It's just made me Twitter famous, so I appreciate that. And the Twitter trolls love to beat up on me because it gets them engagement. We feel like we have a fortress balance sheet, we're comfortable, and the margin loan is well managed.
Then that afternoon, the Federal Reserve announced that it would raise interest rates by 0.75% in an effort to curb sky-high inflation. Crypto prices initially rallied on the news as investors hoped that we could avoid a recession, but that rally, well, it was short-lived. On Thursday, we were back in the red. Bitcoin fell to around $20,000 at prices that it hadn't seen since the end of 2020. The losses were closely tied to a sell-off on Wall Street, which saw the Dow fall 700 points to its lowest level in more than a year. Investors simply can't shake the fears of recession, and some say that it could take time for cryptocurrencies to recover from the sell-off in riskier assets.
Look, I think that we're in a long drawdown period here. I think that we've taken the elevator down, and I think that we as an industry are going to have to take the stairs back up and climb out by building real utility. I think that it's a healthy washout in many ways. I think that, one doesn't want to, as a builder, as an investor for the long term, in any of these roles, be in a market where it's being driven by just short-term price action, by speculation, as, let's be honest, the crypto market has been largely over the last couple of years.
So now we're here. It's Friday and Bitcoin is down 30% for the week. Ethereum, well, it's down 37%. Some crypto hedge funds and businesses are facing growing questions about insolvency, but investors are still looking for quality crypto investments.
It's very unfortunate that there was a conflation of innovation and financial innovation, which I think is the real story here. And instead, we had financial instability. Because of this opaque leverage, you just couldn't tell where all these risks were building up. And really, in some ways, this is just an age-old story. You're borrowing short, lending long. And I think it's really unfortunate that people lost money. And I think it will, in some ways, set back the space, because you will lose some early adopters or some of the people who just came in new to the space. But I think on the other hand, the fundamental technology here in the adoption curve that we see, institutions that are coming in, how you can get your financial system to operate at the speed of the internet, those are things that need to happen.